Good morning, everybody. This is Kathy with Premier Companies. Welcome to a Monday morning webinar with us. Good morning, Mike. I have Mike with National Life Group on the phone with us. Good morning, Mike. How are you doing today?
Morning, Kathy. I'm great. How are you today?
I'm doing pretty good. For everybody out there, Mike and I were just talking about coffee before we started the webinar, so I hope make sure everybody has their cup of coffee, get their good creamers inside it, get ready for an exciting webinar today that we're going to be discussing. I'm so excited about this one. Mike, you've been teasing me and trickling down some information with me for the last couple of months, and I'm just so excited. But we got a few more minutes because I'm seeing a whole bunch of people jump on right away, so I kind of want to wait a few more minutes. But how's everything going in Florida with you?
Well, we living in Tampa, Florida, you dodge a lot of bullets in the summertime, but we dodged one last night. We had a flurry of tornado, a lot of tornadic activity come in off the Gulf of Mexico down south of Tampa in the Sarasota, Longboat Key area, and it made watching the AFC Championship game between the Steelers and the New England Patriots a little tedious because the Weather Channel broke in and did a split screen. So you're trying to watch the football game, yet here's this guy showing these red funnel clouds, and he's like, be careful, head to a shelter, this might be coming your way, and people are on Facebook going, oh, I wish the weather guy would get off the TV, I want to see the game, and and then after everything was done, we were very fortunate that nothing really came on shore. It was a lot of water spouts, but it's kind of cooled down and very windy, and it was just one of those, again, we dodged a bullet, and we're thankful for it. And it's cold.
Wonderful.
It's like in the 60s.
Oh, no, that's really cold.
I know. We're a bunch of babies down here.
Get your winter jacket on.
Exactly.
All right. Well, I think we can go ahead and start. We've got some more people who will keep on logging in, but if you have any questions, if you log in late, just let us know. Someone just told me it's been raining for 2 straight days, but they need it, so that's a good thing. Yeah, that's a good thing if you need it, though.
Water's good. Yeah.
Yeah, water's always good. Rain's always awesome. So, Mike, let's jump in and kind of go over some details on the new product, or not a new product, but just what you guys are doing differently to your products.
Okay, well, thank you for the time, and happy Monday, everybody. Hope everybody is well. Hope you had a great weekend. What we're going to share with you today, I think, will really kick off your year. I know you attend a lot of WebExes each and every beginning of the year, and you're like, well, that's okay. That's it's ho-hum, I guess it's okay, and maybe that pertains to me, maybe it doesn't. But what I'm going to share with you today is kind of a host of different things that are either here today, launching today. You're the first to see this, by the way, so, and that's no accident. It's because we have a very cherished partnership with Premier Companies, and Kathy is one of my favorites, if not the favorite. We talk weekly, and they've done a great job in partnering with the National Life Group. And for those of you not familiar with the National Life Group, we've been around for 168 years, and we own Life of the Southwest, LSW, in Dallas, Texas. National Life Group is headquartered in lovely Montpelier, Vermont, where I'm sure they probably skied all weekend and enjoyed all the snow they had up there. One of the things that, in getting right to the point, because I know your time is valuable, why National Life, and why has Premier? Why are we doing this WebEx with Premier, and why have we done so many? We like to think that our partnership is based on the freshness of what we bring to you, the independent financial agent consultant. We try to keep things fresh, and not only do we keep things fresh, we think outside of the box. And that's what you need out in the field, because I don't care what kind of commissions you're getting and how many people you get in front of. At the end of the day, it's whoever you get in front of, what is your closing ratio? Can you close that case, or is the client going to come back with the proverbial, you know what, that's nice, that's kind of cute, let me think about that. And maybe, call me back in a month or two, and maybe we can think about it again. Where when you have all the conversations that we have, and what you're going to hear today, and what you're going to see and feel, and put it all together, this is all designed to be so consumer-centric that the product just leaps off the presentation table and helps you close itself. I mean, and how many people can make that prediction or that forecast? It's pretty bold. But my thinking is, and I do a lot of teaching and a lot of coaching in this business, it puts a lot of swagger in your step, because, hey, products are all, give or take, you can flip a coin. A lot of product is about the same. It's a sea of sameness out there. And we've broken that mold, and I like to affectionately and boldly make a statement that the reason we're doing this WebEx today, premier companies have realized this. We are the competition. In the indexed universal life space, National Life Group with their LSW product, Flex Life 2, is the competition that has set the bar, and everybody is chasing us. Now, on my screen, you will see a recap of some very fine competitors across the board that have similar scenarios of living benefit strategies. But what I'd like you to focus on that, again, with the closing ratio in mind, for every 10 people you see, wouldn't it be great to double, triple, and quadruple your closing ratios, because you could pivot to so many conversations, because every sales presentation is different. Every prospect is different. You could have two business owners. You could have a husband and wife. You can have a single family mother. You can have a single family father. You know, there's so many dynamics in our great country and so many needs. And, you know, the days of just, I did a meeting the other day, Kathy, and somebody was looking at me, and I like to use analogies and props. I took some props with me, and I don't know, I like to save my old cell phones and put them in a drawer for some dumb reason in my desk. So I pulled up this old flip phone from 10, 12 years ago, and I said, look at this thing. Remember when this was all the rage? This is your regular life insurance. It does the job, just like this cell phone did 12 years ago. It makes a phone call. Then I pulled out my i7 phone and showed everybody this big screen and all the applications on it. I said, here's life insurance today. Life insurance you don't have to die to use, and life insurance with living benefits. So as you can see on this screen, yes, other carriers have them, but nobody has the total package that we do. And if you look at terminal illness, 24 months versus some have caught up to us, some are still at 12 months. That's important because some people might want to take that terminal illness diagnosis and try to save their life and look for alternative medicine. It's nice to know you can get up to $1.5 million tax-free, fully or partially, to be able to prolong your life or you know, pursue your bucket list. But then as you go down this list, you could see that it just gets stronger and stronger. And I'll just go right here because this is not what we were going to present today, but I wanted to set the stage. Look at the critical illness, critical injury. Most of the industry does not have critical illness. And we have 13 triggers on our, you know, heart attack, cancer, stroke, etc. This benefit goes to $1 million. It's a huge talking point, but when you pivot to the critical injury, nobody has this in the industry. Why is it a big deal? Because it covers coma, it covers paralysis, it covers severe burns, and it covers traumatic brain injuries. I had an agent in Florida that sold 32 term policies to some firefighters and paramedics because of this critical injury. He played golf with a paramedic firefighter and started talking about what he did for a living, and the guy said, man, that sounds like something we should have. Why don't you come by the fire station? I'll talk to the chief, bring some pizza, and maybe you could tell everybody about what this new kind of life insurance does. Well, he thought he'd sell one or two. He sold the whole station and all 3 shifts. So I think the number was around 32, but he said, hey, Mike, you know what? It was this right here. And then when I talked about the rest of the package, it was phenomenal. So again, we are the competition. Yes, other people have it, and you know, we don't, you know, hey, are we the right prescription for everybody? Maybe, maybe not. But we just wanted you to know that we really know what we're doing, and we really were one of the at the forefront of really putting these living benefits together. So I'm
Hey,
going
Mike,
to share
I want to jump in for a second here, just to let you know, I did that meeting I told you about last week, and one of the questions I did ask the agents in the room, there's over 40 plus agents in the room when I was talking to them. One of the first things I asked them is how many people, when they're talking to their clients, great, you have life insurance. Do you have the new kind or the old kind? And I asked everybody in the room, do you know what the new kind is? And not one of them could raise their hand. And then I had to go over that with them. And after I got done, I had agents who have been in business over 20 years. Never heard it that way. It's
well,
a
that's
big
why I
change,
tried to do
like
with
the
the
old
cell
phone
phone,
to the new
and thank
phone.
you for throwing that in there, because I used to say that a lot, and people kind of looked at me. But it's kind of like, yeah, I mean, you could. I'd love to find an old antique rotary phone and say, hey, remember this when you were a kid? That's the old life insurance. Now look at this. This is a virtual computer. I mean, what can you not do on an iPhone or an Android? It's pretty amazing. But I got to tell you, I'm not just a wholesaler that sipped a cappuccino at home office and wore a pretty suit and tie every day. I've been out there in the field earning my stripes as an agent for about almost 10 years before I became a wholesaler. And one of the #1 blow-offs of a client or a stall tactic to get out from underneath the discussion was, hey, I got lots of life insurance. My roommate in college works for New York Life, and he's hooked me up pretty good, so let's not worry about it. Well, that's great. I want to sit down with you and redesign all that and bring it up to modern day standards. It's kind of like the person that's got the flip cell phone. Oh, I already got a cell phone, Kathy. I don't need another one. Well, wait a minute. Let me would you like to upgrade to this? Look, and then it's easy as that. You show the new cell phone and you show all the applications and the features and the screen size, and they're like, who does not want to upgrade to that phone if you can afford it? 9 out of 10 people do it, if not 10 out of 10. And that's the same conversation here with the living benefit story. And if you don't have life insurance, you can pivot to the conversation, well, why didn't you buy life insurance? And they'll tell you why. And then if they didn't tell you why, you could probably surmise and say, well, maybe you were thinking of this, this, and this. It was just about death benefit, and you had better things to do with your money. Look at what this does. It's the most efficient life policy in the industry. And by the way, all of our products have it. Our term products, our Index Universal Life, our whole life, our fixed universal life. So they all have the living benefit story. It's all the same. So what I want to talk to you about today is a new underwriting program that is only going to be available for our Indexed Universal Life, which we used to call Flex Life. We have now enhanced it, and for those of you that know us, we enhance our product sometimes twice a year. This year it's been 3 times this year. And we had another record year. We were up 12% in life sales, again, for the 6th year in a row, while the industry is fairly flat. And that, again, the reason is because of the story we tell. So here's why you're really tuned in today, is the easy underwriting. I don't know of anybody in the industry that is doing this. There may be somebody doing an offshoot to this, but this is really cool because it's basically no paramed, no fluid, up to $1 million of death benefit. And that's kind of unheard of. And I think why are we doing it? Well, technology, just like the cell phone story, we now have the ability to tap into databases like LexisNexis and the pharmacology database and MIB and all these traditional outlets to be able to really take a look at your client behind the scenes once they authorize us to, with that all-important HIPAA form. And so now what we're doing is we're taking this to a new level and saying, hey, look, if we can get a really good look at our clients, since we're always on the cutting edge and we are thinking out of the box quite a bit, almost all the time, what could we do to make you, the agent, your life easier to help even accelerate that closing ratio? What if we could make that underwriting piece, which I know a lot of people just dislike. Who likes the underwriting? I think that's the #1 bugaboo that people say, you know what, I struggle to learn how a product works, but once I get it, that's cool, and I understand the benefits, but oh my goodness, that underwriting, the clients hate it. They hate the paramed, they hate getting a needle, taking their blood, they hate the invasion of privacy with the urine sample test and the blood pressure, and you all know that, and the clients stall. You call Kathy and say, hey Kathy, that case has been in for 4 weeks. How come it's not issued yet? I want to get paid on the thing. Well, sorry, but your client hasn't had their paramed yet. So the the agent calls the client, and the client says, there's never a good time to do it. Yeah, I watched football all weekend, had a few too many beers, so I don't want to be giving any fluid samples now. I want to wait a week or two until my metabolism settles down or whatever. So we're trying to get this underwriting situation under control where whether you're a veteran agent or whether you're a new agent, let's streamline this process. And what we're doing is we're getting rid of this blanket approach to every case, ordering the labs, the paramed, having an exam, getting the APSs of the physicians. Now, please know we always reserve the right to do that as we move forward, but because we have access to so much information, we really have the ability to make some underwriting decisions based on data we can tap into. So let's take a look at this. FlexLife 2, potential to accelerate your cases through underwriting on a case-by-case basis. It's less invasive for your client. In some cases, you're getting automatic issue same day if all the criteria is met. Now, unlike our program that is still in place, we have this no fluid underwriting in place currently, but only up to $250,000 of face amount in age 65. So 65 and under, $250 on term, whole life, UL, and IUL, but we are rolling this out on the IUL only, kicking it up to $1 million. So, and one of the trade-offs was you would only get a standard rating rather than a preferred. Well, now you're going to be delighted. Your clients are going to be able to share in 3 preferred ratings before we get to a standard rating with this less invasive underwriting. So that is very, very exciting, I think. So here's the new program from ages 18 to 60, up to including $1 million of face amount, ages 61 through 65, up to and including $250,000 of face. There'll be full underwriting for higher face amounts and or age groups. I can't tell you how important it will be to complete Part 2 of the medical on the application to make sure that all of the medical questions, every single one of them, is answered completely and to the fullest. Yes or no, very legibly. And if there is a medication or something they're taking, and I got to throw this out to you. I had a client an agent the other day saying, my client, we delayed, their policy got delayed because we saw on the RX database that they were taking antidepressants. Well, my client's not depressed. They're not taking it for anxiety. I said, well, what are they taking it for? And he said, well, it's because my client's going through menopause and suffering from night sweats and hot flashes. Doctors today are finding that these antidepressant medications take the edge off of that, if not, help out to remove it completely. Well, you need to maybe put a cover letter on your application to explain that situation, because an underwriter can't read between the lines, and what stalls the case is asking for an attending physician statement from the physician saying, hey, why is the client on this medication? So it's commonsensical, but if you complete Part 2 of the medical application, we intend to move 30 to 40% of our business through this underwriting protocol, and it starts today, and it starts on every IUL app that comes in the door. We are going to give you first shot at this easy underwriting. So what does that mean? It means you do not have to order a paramed up front. Forget about the paramed up to $1 million. Let our underwriters take a look at a case. They're going to look at each case individually on its own merits. That's a big departure from what the industry does in terms of a blanket approach of looking at every case the same way. Let's go send a paramed out there. Let's get some fluids. Let's get some vitals, height, weight, all that, ask questions, and then get the physician's, attending physician statement and all of that stuff. Well, how do we do it? How can I explain this to my client? Very simple. We look at the application, make sure everything's filled out correctly, all the health questions correctly. We look at MIB, the Medical Information Bureau, see if there's anything there. All of you should know that we have access by virtue of the HIPAA release to look at the RX database. That's important, and you got to tell the clients, hey, look, the insurance carrier knows what medications you're taking if you're getting them legally through a physician, because they're on this database. So don't forget to leave out that cardiac or high blood pressure medication or what have you, because we're going to find it. What's brand new is we have Instant ID that we're going to talk about. We can verify the identity of your client, which is huge in this era of identity theft. What also is new, and don't panic on this, where the industry is shifting to a body mass index rating, a BMI, rather than the height and weight. And that's going to help us do risk profiling for coronary events and diabetes and things like that. It's only going to be used to score the overall underwriting case. It's not going to be a big knockout factor because of the BMI, unless your client is off the scale with that. We have a risk classifier that's new, and that's LexisNexis. We'll show you how this risk management database company will tie in immediately motor vehicle records, financial records, and criminal records. So you can see that what you've seen so far here an underwriter at the flip of a switch can really get a snapshot very quickly of the profile of your client and whether we can just issue this policy very quickly or whether we have to do something over and above. Now, one of the over and aboves is from $500,000 to $1 million. There'll be a quick 10-minute tele-interview phone call from National Life to your client, just going over some medical situations or questions, which I will overview in a minute. So let's take a look at these very quickly. Instant ID, it's provided by the LexisNexis Group, which is an industry leader in risk management, and it helps prevent fraud, which, you know, we're looking out after you, the agent, as well. Nobody wants this huge chargeback when we find out that a person wasn't who they said they were, and one thing led to another. This is going to accurately identify the client and let everybody sleep at night. Here's the one that I think you're going to have to get your arms around a little bit, but don't hyperventilate. It's not that big of a deal. It's going to replace the height and weight chart. It's going to be the body mass index, and you can see the formula for BMI here, and you'll see a chart shortly that'll show you how that'll correlate to preferred, elite, and select, and standard as well. But there's your BMI right there. And here's the math. By the way, for all of you attending this WebEx today, this PowerPoint presentation is already in the hands of Kathy Elkins and her life team at Premier Companies. You can call them and request a copy of this. This is for agent use only, not for clients. The new risk classifier, that again, I just mentioned it will tap into financials, motor vehicle, and criminal, and be just one piece of the underwriting decision, but the accent is on quickness. So I think you're really going to like this this PowerPoint here, because when you do ask for it from Kathy, you'll see all the criteria here for elite, preferred, select. Also, we will be releasing a new underwriting guide today that will also provide this information for you. But pretty cool. Everybody asks these standard questions. Well, what's the difference between elite, preferred, and select? And I'll tell you what select is in a second. Well, no smoking within 60 months or nicotine use to be an elite preferred with us. Then it's, you know, to be preferred, it's 36 months. And then over here, to get the select, I believe, I got to move these little boxes, it's 12 months. Then you get the family history, the health history, the driving history, all pretty much self-explanatory. But here's where I think you'll really get some eye-opening. You could read all of this about prescription drug history and use and hobbies and avocation, alcohol and drug use. But here's your BMI, and that's pretty liberal. I think you're going to find that that's a little bit more liberal. You know, and I'm a big dude. I'm 275. I used to play in the NFL. I was a tight end. I like Kathy to think that's 275 of solid muscle, but it doesn't matter whether it's not solid muscle or semi-solid muscle. My BMI comes out to be 32, 33, so you can see that even Big Mike, as they call me, would come in at select. Now, what is select? So, well, we're going to take a look at that in a second. The tele-interview, a lot of people want to know about this tele-interview. It's actually going to be performed by Exam One, who's been doing this forever, but they're going to identify themselves as the National Life Group. And that's, again, for face amounts from $500,000 to $1 million. They're an industry leader. You do not have to set this up. However, you have to set the table. Instead of ordering a paramed, you need to tell your client that someone from National Life is going to call within 5 days and identify themselves, and they're going to ask them a few questions, and I'll show you some of those questions in a second. Please be prepared for this phone call. Don't freak out. It's just a real simple, easy phone call, and if they leave a message, please call them back, because that could be the one thing delaying total quick issue of your policy on those larger amounts. So the tele-interview call, what will they ask? Because clients may say, well, what are they going to ask me? Here you go. Have you ever been diagnosed, treated, or been told by a medical profession you have any of the above? And you know, and again, these are all covered on your application, but we want to double check with a third party. And you can see here, anxiety, depression, diabetes, high blood sugar. Up here, this is interesting. Losing weight in the last year. Nicotine products, and are you taking any medications for chronic pain? The average turnaround for this this easy underwriting telecall should be less than 5 days. We're targeting 2 to 3 days, and it is much faster than ordering a paramed. I mean, you can almost do it the same day, and really get this thing issued. And we're talking all the way to $1 million, folks. And again, this is only from 500,000 to $1 million. So up to $499, $999, you don't have this underwriting phone call. The Exam One tele-interviewer will identify themselves as a representative from the National Life Insurance Company. So make sure your client knows they will be contacted by this representative of National Life, and they're authorized to ask additional medical questions. Here are the rate classes, folks, and I'm excited about the Select. Why? Because, well, number one, under traditional no fluid that we rolled out 3 years ago, we could only give standard rates. Now, look at this. We can give them everything, Elite, Preferred, and a new category called Select. What the heck is Select? That's that gray area where they're not quite preferred, but they're not quite standard, but the underwriter can't give them the flip of the coin and gives them standard. So it's almost like a table-shaved classification. And you might be saying, well, big deal. Well, it is a big deal to some clients because when they're told they're standard, they almost feel like they're being told they're average or they're whatever. And when they see preferred, what do you mean I didn't get a preferred? You know, what's wrong with me? And then there's this little battle mentally and verbally. And again, as you're adding all this up, folks, I hope you're seeing this trend to making not only underwriting easy, but making your life easy as an agent when you're case designing and setting up life insurance protection for your clients, that we are just really trying to think out of the box and help the client and yourself. And of course, the rates will be somewhat reduced than a verified standard non-tobacco rating. Up to $250,000 only, we're going to offer the Express Standard Non-Smoker 1 and 2. That will be up to, Express Standard 1 will be rating up to 200%, and then the Express Standard Non-Smoker 2 will be $225 to $250. So again, kind of like a table shave, and it's all about rates, cost of insurance, etc. Juveniles, sometimes folks were a little concerned about the rating on that, but we will cover them from 0 to 17 up to $100,000 with parents with no coverage, and then up to $1 million based on what the family has in force. So a recap. This easy underwriting program is only available on FlexLife 2. FlexLife 2, unfortunately, I do not have the state approval list yet. We're rolling it out today after 12 noon. I will have that state approval list in Kathy's hands and her life team this afternoon. We're approved in 39 states. We were only approved in 6 when we rolled out the regular enhancement of this product back in November, which was California, Florida, North and South Dakota, and I think 2 other states. So we'll have 39 states available for you today. Check with Kathy on that. And with that, we will be sunsetting the regular FlexLife product, which sunsetting means withdrawing it from sale at the end of February. So this FlexLife 2 is going to be our marquee IUL. And again, full underwriting over age 65, and you've got the no fluid 18 to 60 up to $1 million. Effective date today. So bring on your cases. Question and answers. Well, there we go. That'll really cover. Kathy, I'm going to, if you want to step in for a second, I'm going to review our enhancements to the FlexLife after I pull up the PowerPoint here.
Okay. I have no questions just yet, but if anyone has any questions, go ahead and type them up. Let us know, and we can start answering them.
Okay.
So,
well, I'm very excited about this because, again, what do you think, Kathy? What are your thoughts?
I'm excited. I can see a lot more business being placed your direction. I can see this going to be a good partnership for the agents, working with Premier, bringing this to them right away. I love the new direction that your company is running with us.
Thank you.
Because that's the biggest thing is we just had it. It's kind of funny. We just had another agent tell us, he goes, well, my client doesn't have time for the exam, so the policy's been sitting there for over a month.
Well, let's examine that. Thank you. That's why I like going back and forth with you a little bit here, kind of like a radio show. I have found that there, people come in all shapes and sizes and thought processes. Some people just don't like the invasion of privacy with the paramed. Some people don't want to know. what their blood profile looks like. They're afraid. I had a dear friend that used to almost pass out with anxiety when they put a blood pressure cuff on them, and their doctor could never get an accurate. She said that when she did it on her own at home, it was perfect, but when she went to the doctor's office where a professional did it, she freaked out and had a little mini panic attack, and the blood pressure was always high. So, and there's a lot of people who have a phobia about needles. I had another friend that would pass out just looking at a needle being put in their veins. So people have different issues, and this really expedites and streamlines everything. Before we get to the enhancements of FlexLife 2, I want to give you some excitement that's also coming in the term life arena. At the end of January, we are going to launch a quick quote system that you can actually activate off of your cell phone or your iPad, and the app will be available at the end of January off of all the app stores, including Google Play Store. So what that will give you is the ability to just pull out your phone and click on the icon and do a quick term quote for a client. I mean, how cool is that? And I mean, that could be happy to be having lunch with somebody. You could be in a golf cart playing golf if you're in Florida, or in a bowling league having a beer, and they say, hey, what do you do for a living? Oh, let me tell you about the living benefits. And you tell them your story, and they're like, hey, do they have that on term life? Yeah, we do. Well, how much would that cost me? Well, hey, put your beer down. How old are you? Boom, 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 boom. Put it into the thing, and you can give them a quote right on the spot. I think that's very cool, and I have to give you a little disclaimer. Our term rates are not, we're not in the term wars. We're not trying to be cheap. Our term is really a stepping stone to eventually taking a permanent plan with us with IUL or whole life or regular UL. So the term, yes, it has living benefits. It does not have the easy underwriting to $1 million, but it does to $250,000. And the real idea behind the term and why we launched it is because a lot of people will look at a properly funded IUL or an overfunded IUL, meaning putting more premium in to accumulate more cash value. And they say, hey, well, you know what, this is great, but I can't do it today because I have 2 kids in college, or my wife or my husband just got laid off and they're starting a new job in 2 months. Can you come back some other time, maybe a year or 2 from now, and we'll do this. I love it. Well, the problem is underwriting. Things can change, and if you come back a year or 2 later and the client now has some chronic affliction, the husband has been diagnosed with prostate cancer or had a heart attack, or, you know, I mean, you run the gambit. All of a sudden, they become uninsurable, or there's a waiting period. You know, with cancer, it's a 5-year wait, or they get rated severely. And then the client says, boy, it's a shame I didn't take out that life insurance with you 2 years ago. I wish you would have twisted my arm. Well, instead of twisting their arm, how about putting them in a 10, 15, 20, or 30-year level term with LSW? And the big deal here is they get the living benefits, but our conversion privilege is bar none. Most companies only have a watered down, and I'm being very polite, a watered down product that you can convert to within. It's not very competitive because they don't want to be selected against, because they know that a lot of people that can't leave and go into the open market because they've had a health change or a significant health change. So they water the product down, and that's all you really get a choice of. With us, we allow you to convert to any of the permanent products both National Life or LSW have for sale at that time at the classification you were at. So if you were preferred or elite on your term, you're going to be preferred or elite on your IUL or your permanent plan, even though you may be totally uninsurable right now. So this term offering is a big deal. Secondly, we're rolling out a large case scenario for groups of people of 10 or more lives, and you'll have to check with Kathy on this later. We're going to do a list bill system, but if you've got some relationships out there where we could carve out some executives, what they call a 5A occupation, you could always talk to Kathy and her team about what 5A means. It's more white-collar-ish business type endeavors. We may be able to offer a guaranteed issue or a simplified issue approach to some or all of those cases. So that's really exciting, and we're very excited about that. So back to FlexLife 2, and I'm going to wrap this up. I know we've been on quite a bit. Give me another 5 to 10 minutes and we'll be done. As you know, the big deal about an indexed universal life is you've got the downside protection with the potential for upside cash accumulation. Your client is never exposed to premium dollars at risk. I got to tell you, the market is flourishing right now, and I don't want to go down this road because I know it gets a lot of emotion, but after our past election, there is, you know, regardless of what your feelings are about the government in place, let's look at the economics and the financial situation of, it didn't matter who was getting in. I think we just have a world economy that's always been up and down, and the markets are always up and down, and we've got this temporary bump in the market. But all I'm hearing from the prognosticators, I almost said, I don't even know what I said. It procrastinators is what I was going to say. But the prognosticators, they're saying, well, you could see a major market correction coming. And one of the biggest things, I've been in this business 30 years, I could see people's 401ks go up and down. You're always playing catch up. We kind of forget what happened in 2008 when a 401k became a 101k. More and more people, and by the way, this is interesting, Kathy, I want to throw this out. I was listening to a money market report the other day, and it was interesting to hear this analysis that an economic forecaster, a business economic forecaster, came out and said the 401k killed the private pension plan in America because it gave business owners the permission slip to not have these fully funded, guaranteed pensions for their clients like our fathers and grandparents had, and they shifted all of the risk and the contributory risk to the individual employees. Well, the problem with that was today people move from job to job much more voraciously than they did back in the day where people stayed 50 years or 20 years and got the gold watch when they retired. Some people change jobs every 2, 3, 4 years. Well, if the business has got a 5-year vesting plan on the business 401k matching contribution, all those people are leaving with their 401ks and rolling them to an IRA and losing that match. And you know, the businesses are making out. They're saying, hey, that's cool. I saved a bunch of money there. So a lot of people are pivoting to doing something themselves, and they really like the IUL because it takes away that downside correction and always gives them that upside potentiality with, of course, the death benefit. And you know, you could read between the lines. I think everybody knows what's going on there. Now, we went through easy underwriting, so I'm gonna go through this, get out of that, and I want to get to right here is what's very important. We have put in a new loan option to this FlexLife 2, and I'm not going to bore you with all of the loans that can go out, but to take money out of a permanent plan with any company, you can withdraw money. You could take a standard loan, which is usually a wash. They give you an interest rate and they credit an interest rate, and it's a wash effort. Or they can, what most people illustrate is the participating variable loan, because that has an arbitrage, and usually your money is even though you took money out of the product, it's still phantomly there earning interest at a higher rate, and the loan rate variables. Well, what we've done now is we're putting in a new, on top of all that, we have our lifetime income benefit rider, which if they turn it on and pay 65 basis points, they are guaranteed to have tax-free income for life, no matter how long they live and no matter how the product performs. Now we're going to have a participating fixed loan of 5% for life. So now we're going to give our clients even more choice. So when you're doing case design, particularly on these large cases, you can take the 1 or 2 items off the table of the what-ifs that make people feel uncomfortable and say, well, look, I'll illustrate that standard loan, and you could see how it's going to perform or what ballpark it'll be in. So we really have all of the bases covered. And to be honest with you, some of our competitors said us having that lack of that loan rate really kind of hurt us a little bit in some of the larger cases. Well, we hurt no more. It's gone. So it's a nice little 5% fixed loan rate option, and that's a story for another day that we can talk about. And that money participates in the indexing, so that's pretty cool too, just like the variable loan rate. So a lot of good choice there, a lot of conversations, and you have the ability to customize each and every situation for your clients. This is the big one I wanted to talk to you about today. It's called the benefit distribution option, or affectionately called the BDO. And that's what's not approved in every state yet. Flex Life 2 is approved in every state except New York. New York has its own Flex Life 2 with National Life paper. But what is not, which is only approved in 39 states, is the BDO that I'm about to show you. And I'm just going to make it real simple. What is it? It's if you ever run into a client that is really savvy and says, hey, Kathy, I want to put as much money as I can in this. I get it. It's great. The upside potential is phenomenal. There's downside protection. I got these living benefits called the accelerated benefit riders. I've got all this going for me. Is there any way you can juice up that cash accumulation a little bit more? Because I really need to squeeze every drop of income out of this product. And the answer is yes. This particular company has launched a new streaming death benefit. So if you're willing on the back side to give up 50% or 100% of the death benefit being delivered to your beneficiaries in a lump sum fashion, and I'll show you what that's going to look like. Let's say you take maximum case scenario to really juice up the cash accumulation would be to have 100% of the death benefit be paid out to your beneficiary over 30 years. And that would lower the costs of life insurance and allow the accumulation value to pop, and you're going to be able to see terrific growth there. And I'm going to show you. So what are the benefits? Well, the benefits, again, lowering the cost of the charges of the death benefit, but also somebody used the term poor man's trust, that this product set up this way, maybe the client would feel better in delivering this money in a 10-year stream or a 15-year stream to the beneficiary because they'd be afraid that their survivor may mismanage the money, or if we put a lump sum of $1 million or $500,000 into their hand, it just may be, misspent or misinvested, and it's gone. So this is an option for not everybody because it's irrevocable. When they take this option day one, you can't change it. It's carved in stone. So it's one of those things that you're going to keep in your back pocket or as an ace up your sleeve as you move forward. But again, I don't know of anybody else that has this, maybe one other company. And when you put the whole package together, again, it's being able to close as many people as you can with as much choice and efficiency as you can. So again, the benefit period would be paid either 50% or 100% of it, your choice of 10 to 30 years. And what's interesting here, Kathy, is we have to pay this all out by age 90. So even though a person may take a 30-year streaming benefit to maximize their potential of cash accumulation, if they die at 80, we got to pay it out over 10 years. So, it would be 30 years when they're young, but as we get older, we have to pay the entire benefit out at age 90. So somebody said a picture's worth 1,000 words. Here it is. With no BDO, no benefit distribution option, you can see your cash value accumulation at age 65, and there's a lump sum payout when they die. Here's the 100% over 30 years. You could see that the client's going to have almost $17,000 more of cash value accumulation, and then you could see the rest of this in the chart. And you could get this PowerPoint from Kathy, and she could show it to you. Now, here's the loan with no benefit distribution option. Here's your loan rate on $250,000. Here's your participating variable loan rate. Here's your participating fixed loan rate, and here's your lifetime income benefit rider. And this is a great illustration for two reasons. See how this is higher than this by about $7,000? That's because there's risk there. I'll go back. There is some risk there because if you live too long and you take out too much money out of this policy, or the policy doesn't perform because of economic conditions, sometimes the policy will be in danger of collapsing and you've got to stop taking income, or you might have to put some more premium in it to keep it going because the IRS will hit you with a big tax bill, because for those of you not familiar with this, taking money out of a life insurance policy on a series of loans is great. It's tax-free. However, if the policy lapses, the IRS reserves the right to go back and tax you on all the distributions forever that came out of that contract. So that's an Armageddon tax scenario that you don't want to have. So what the lifetime income benefit rider does, it takes those two risks off the table for a 65 basis point charge at the time of taking the loan. We don't charge it up front. If you want to do this down the road, then you could see you're going to get less income, but it's not only guaranteed for life tax-free, you're guaranteeing that your policy is not going to lapse, because we freeze it at $15,000 of death benefit. So you'll always have $15,000 of death benefit, and you don't have to worry about the lapsation or the lapse of it. There is a minor change in the living benefit scenario as well. Whoops, we go back. You can see about 10% of the living benefit total is given up when you take that BDO option. So again, it's got a little trade-off. You're making a trade-off for more excessive cash value accumulation. But I repeat, this is not going to be your mainstream sales scenario. You're not going to be selling this benefit, and there's no cost to the rider. It's just a matter of keeping it for those instances where people are really focused on cash value accumulation. For those of you that have tuned in to previous WebExes with premier companies, we had Jackie Freiberg on talking about cause and how we are compared to turning the life insurance industry on its head, kind of like what Southwest Airlines did in the airline industry many years ago with our living benefits and our culture within the company. Well, in line with that, we are on the application, there's a box where you could check off if you're listing beneficiaries and you're leaving part of your death benefit to a IRS recognized charity, 501c3 organization. We will at no additional cost match up to 2% of what you're leaving to that entity, not to exceed $30,000. And here it is. So that's a nice little conversation with your clients who may, and I've used to see it all the time, somebody's spouse had predeceased due to succumbing to cancer or heart disease, and they're leaving some of the proceeds to the American Cancer Association, or you love pets and you want to leave money to the SPCA, or you do a lot of work in your community church and you want to leave a portion of your death benefit to your religious organization. We're going to match up to 2% of that, not to exceed $30,000. So what a great conversation that could be in certain scenarios. And when you really add all this up, folks, it also helps down the road when somebody else comes knocking on your client's door and says, hey, I'm taking care of some aspect of your insurance planning, and all of a sudden the discussion comes around, oh, you own a life insurance policy. Well, I could sell you one. Let's knock that out. Let's put in this company that I represent. Hopefully the client is savvy enough at that point to say, no, you can't replace this. This policy does so many wonderful things for me that I'm counting on it to deliver. It's like the Swiss Army knife of financial planning, that we're not touching that bad boy. You leave it alone. Or if they don't have that savvy at that point, you get that replacement notice. Boy, have you got conversations to go back in and conserve that business and save that business, because you can just do a review of everything we do. This may or may not pertain to you, but we have a rider that blends death benefit at no commission, so you could take part of your commission is taken away, and you could lower the premiums. And this is used in case design for larger cases when you're doing key man business or you're in highly competitive situations. And the only thing I really want to touch on today, if you ever use that rider, half of those living benefits were devalued, but we've changed that. So now the living benefits, or the accelerated benefit riders as we call them, the ABRs, are no longer affected by this blending mechanism. And you may or may not run into a blending scenario, but it's nice to know that we made a correction there to be very consumer centric. Last thing I want to share with you is we have a bonus on our product that you'll see in the software year 11 and beyond. That was a non-guaranteed bonus, but now moving forward, that bonus is going to be guaranteed. So You can see the formula here. For every 10% of interest credited, you're going to get a bonus guaranteed not to exceed 0.60 of accumulated value. So that's something you can discuss with Kathy and her team as well. But as you can see, as we kind of, and we'll end with the child's term rider, we bump that up to $150,000, and the maximum coverage age is now 25. So that's a nice little conversation point too if folks want to put their children on their policy as a rider. So recapping everything, we have the situation to show long-term cash surrender values and improve them. You could see that even on our base product, if you don't use that BDO, we've repriced our product to be 5 to 10% cheaper. So that's great, Kathy, in a competitive environment. But and then you can see everything else on this screen. I want to throw one last thing out there. Be careful when you compare carrier to carrier, because in the IUL space, these are assumptive hypothetical guarantees. And some people get caught in the trap of trying to compare these products to the guaranteed products of the old GUL days. And what that meant was the premium was guaranteed till age 100, and the cash value was guaranteed at a certain amount. Well, in IUL, you got the upside and you got the downside, but you know, you're at the mercy of what the product actually delivers. And software just gives you a ballpark idea. So these illustrations are not absolute guarantees. They're ballpark, assumption, you know, hypotheticals. So by taking that and putting all of this living benefit story and everything we just discussed this morning, we really are the competition in my mind. And again, we are number 2 in IUL sales across the country next to Transamerica last year. And I think Transamerica did it by virtue of their old A.L. Williams distribution system, where they created a special IUL product for a very large organization in the country. So we really are, in my mind, number 1 in independent distribution. And at the end of the day, it's all about protecting what matters most to all of us, and that's our clients in our puzzle, our scenario: dying too soon, becoming ill, and living too long. So on that note, Kathy, I'd like to send this back to you.
Wonderful. Thank you for so much information. This is great. I've been taking lots of notes myself for all the new changes. A lot of new changes we didn't even get a chance to discuss, so great. I do have 2 questions that are popping up here. David's asked, he's looking at opportunities. Can you explain a little bit, does the product have an e-app and it's authorized for telesales?
It does have an e-app. Thank you for asking that, David. Great question. And that e-app, for those of you that don't know what an e-app is, you electronically go in through your iPad or your computer, and you can electronically submit the application. And what's neat about it is, because it's paperless, but it also eliminates what the industry calls NIGO applications, not in good order. If you forget because you're interrupted by a question and you forgot to answer a question on the app, it sits there, or you have to get an email from the underwriter saying, hey, you forgot, you know, question 4, part B. What was the answer, yes or no on that? An electronic app will not allow you to submit it until all those questions have been answered effectively. And also, David, we are looking on a case-by-case basis. You would have to call me and give me some information on the tele-app situation. Right now, we have 1 or 2 groups that we're experimenting with doing that, but I'd have to know more about it. But generally speaking, we want you face-to-face doing the field underwriting and talking to the clients. But if you do have a scenario that's pretty tight, where you're doing multiple interviews over a telephone and et cetera, I'll have to talk to you about that, and I'll have to talk to our head of new business acquisition to see what the parameters are. So it's kind of a, I hate to be wishy-washy with that answer, David, but it's a maybe yes, maybe no. But we'll look at it. How about that?
Sounds good. Sounds good. And then another question. This agent has left, but you answered most of it. Does the Flex IUL have a guaranteed for their plans? And we kind of went over that. It doesn't.
Well, don't forget that there's always a minimum guarantee. There's a baseline guarantee of 2.5%. And thank you for asking that question, because I don't want to, I could sit here and do a radio show all day long and your eyes would cross, but 2.5% with maximum mortality costs is what we illustrate in the policy that every company has to do according to the National Association of Insurance Commissioners, the NAIC. And I'm glad you asked that question because of this reason. be very careful if you leave an illustration behind with a client or you email the illustration to the client, because that guarantee will be the first ledger they will see after the presentation pages. If you haven't seen our software, I urge you to get a illustration from Kathy and her team on yourself or a hypothetical client and read through that 21-page illustration and see how dynamic it is. But also, please know, as a coaching point, I've had agents tell me, boy, I blew a few sales because I just didn't have the time, and I emailed the darn proposal to the client, and as soon as the client read the guarantee thing, they didn't know it was the guarantee portion. They thought that's what they were going to get, and they could see that with the maximum Armageddon mortality costs that we have to show, which the NAIC is, show the worst of the worst of the worst case scenarios, which is what that is. A lot of clients see that, and they call the agent back and say, no, I'm not interested. So that's because you got to point that out to them. And by the way, you could tell them that in the history of the National Life Group, over 168 years, we have never increased our cost of insurance. We've actually now, as of this point, decreased them 3 times. So good question.
Wonderful. And that is all for the questions.
Well, so everybody great. Have a great week. Happy Monday. Thank you. Again, if you got anything out of this WebEx, which I hope you got a lot, we are the competition. We don't say that arrogantly. We say that lovingly, because what we're doing is we're partnering with you to be consumer-centric, to enrich your clients' lives. So when you embrace your clients, this really isn't a sales process, but a more descriptive of sharing with them this benefit-rich program. And it's kind of like the Swiss Army knife of financial planning. We feel it's the most efficient life insurance product in the industry. And please get to know us. And good luck and good selling. Thanks, Kathy.
Thanks a lot, Mike. Thanks, everybody, for joining us. Please give us a call if you have any additional questions, 1-800-365-8208. Just ask for a life marketer. Take care. Have a great week, everybody. Bye.